Good morning, traders. It's 8:02 a.m. on Tuesday, the 22nd of November, 2016. Thanks for joining. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Key news items overnight: the stock markets across the globe are higher, with many pushing all-time highs. Yesterday was the first time in a fair amount of time that the S&P, Nasdaq, and Dow pushed highs simultaneously. We've seen a lot of discord between the indices. They moved in tandem yesterday, of course, with oil. Oil is lower this morning. It's trading down 27 basis points, down 13 cents. The January contract's trading 48.11, and the oil run is driven, apparently, is driven by the anticipation that there would be a reduction in production on the November 30th meeting. There was information from the Nigerian OPEC delegate saying that everyone's on board at this point. There's a technical committee discussing a 6-month agreement for oil production limits. Expects details of the accord to be finalized by the end of the session today. Negotiations are aimed at 32.5 million barrels per day, but this is a change from 33 million barrels per day. So we'll see how that works. There's definitely a fair amount of news-driven action there in oil, and of course the S&P pushing new all-time highs yesterday at 2196.50. And the overnight high is 2203, so we pushed through the 22 handle, and we're coming off currently. We'll look at that in a moment. There's just a ton here that's going on. Anticipation is that the Trump administration would deregulate a lot of markets, especially finance, and so you've seen the financial sector strong since the election. And I'm sure you all heard of the earthquake that hit northern Japan, 6.9 on the Richter scale. My thoughts go out to them. They're still recovering from the last one with the twin disasters in 2011. And then, of course, you all know that copper is probably the hottest commodity right now. It's up 20% over the last month. The expectation there, what's being priced in, is a pickup in infrastructure spending in the U.S. and across the globe. So there's a lot there on a macroeconomic basis to contend with. Again, I would suggest a news feed. Don't forget that France is also going through an election. That there's a second round of voting later this week, and the front runners are talking about wanting the Brexit to be immediate and quick as opposed to drawn out over 3 years. Anyway, my point is there's a lot fundamentally driving the market. Politics are in the center stage right now, so we need to keep an eye on what the news what the news is feeding us. Overall, for the week, since I didn't cover it yesterday, I was traveling yesterday. I did post notes though on my expectations. I'll go over those. But for the rest of the week, today we have existing home sales as well as Eurozone consumer confidence. Eurozone consumer confidence for November is expected at negative 7.8. U.S. existing home sales expected at 5.43 million. And then we get Richmond Fed. All three of those come out at 10 o'clock Eastern, 9 Central, 3 p.m. UK time. And then as far as speakers, I don't see anything on deck. And there's an 11:30 Eastern 4-week bill auction and a 1 o'clock Eastern 5-year note auction. That's what we have for today. For the rest of the week, again, a reminder that Thursday is Thanksgiving Day. The market closes at noon Central in the futures. And then on Friday, we close at 12:15 Central, I believe. These are half days. It's a national holiday here in the U.S. And yesterday's action was a little bit surprising. We don't generally push directionally on a Monday statistically, and we did yesterday. And the volume was actually fairly decent, uh, a little on the light side. But the expectation for this week it's likely to be light and choppy throughout the week as folks take the week off and have a longer break. For the rest of the week, tomorrow we have U.S. durable goods orders, house prices, new home sales, University of Michigan. On Thursday, again, as a holiday in the U.S., you have the German GDP and IFO. And then on Friday, we have UK GDP, Index of Services, and then U.S. Advanced Goods Trade Balance, wholesale inventories and services. So that's what we have for the rest of the week. Let's take a look at where we were yesterday. Sorry, let me switch the screen here. Got too many screens open. So I'll start here. The primary hypo is right here, stated yesterday. Hypo 1 is expected to provide small pullback to 83 to the 83 area, rotational chop, and then turn up for a push through all-time highs before resting. That's hypo 1. And the reason was buying imbalance left overnight, both on price and delta. Hypo 2 is likely to bring in strong burst of buying. So hypo 1 is responsive, hypo 2 is initiative. Strong burst of buying to find sellers after initial drive. Pause, rotate back into range, and chop. The chop, of course, lasted very short time before it started rallying again. And then I reminded everyone that the planned hypos are intended as contextual ideas, and then the execution is a different story. This is what we ended up doing. We ended up having that initial burst up. Let me minimize this screen. Keeps obscuring my view. We had our initial burst up above the prior all-time high, 21.91 and a quarter, and then we had a zipper, and then we have a large rotation down 6.5 points. This green line is the prior day's high, right? So the day before we pushed that all-time high on Friday to 2187.50 from 2185, and then the overnight high was 2187.50 as well. We pushed through as expected, pulled back into the range, and the expectation is it's likely to push back into this confluence area here, into this confluence area for hypo 2, and start to rotate back down, take out this this impulsive low, and then chop around in here before starting to move back up later in the session. That was the overall plan on hypo 2. So it did not quite work that way. We had an impulse, and then we immediately took that back. There was a time to get out of this mid-trade, mid-short, but overall it just started to continue to drive higher and higher and higher, and push through to 2196.50. And then the overnight session had a similar view in that it just also opened, burst up on the Asian markets, sat sideways, and then the European markets opened around here, and the European markets have just been drifting down. We're trading around the mid of the overnight session. There's a lot of volume overhead, and then below yesterday's high of 2196.50, we have a thin profile, and the expectation is, it's pulled back to yesterday's high, and the expectation is it's likely to trickle down back to where it closed. But overall, if you look at volume delta, it's flat. So the overnight inventory on volume is flat, but the overnight inventory on price, here's where price is, here's where yesterday's close is. Overnight inventory is positive on price, flat on delta. The volume is low, but it's in line with what we've had for the last few days. You can see here, Sunday nights only 140,000, and in yesterday's session had 1.04 million contracts versus 1.1, so it's a little on the lighter side by about 10% or so, a little bit less. And so that's what we've got. Um, and so here's the expectation for today. And actually, by the way, since I did not do a review yesterday, I wanted to take a quick look at the weekly. So what we have here on the weekly is we had this big range day back in October. We had an range week. We had an inside week. We had an outside week. So you can see the high and the low got taken out, and it resolved to the downside on the 31st. And then since the election, all it's done is one time frame up. So we have one time framing up, and we measure that by the lows. One time framing up, we look at the lows equal or higher lows. One time framing down, we're looking at equal or lower highs. So one time framing down, broken, gone neutral, inside, outside, break to the low side. We tested all the way back to the beginning of July, and then from there, the change in temperament, the election started pushing things higher. Okay, and so that's the right now bulls are in control. We're taking all-time highs, so you want to be light and tight on your shorts until we have an indication in the form of a neutral extreme day down or something. A wide-ranging day on high volume down. Then you start to look on the short side. But I'm going to tell you for the last few years, and we did some statistics on this over the last webinar at Stage 5. There's a tendency for the market to drop and then reach a point where the selling pressure is no longer there. A friend of mine on Twitter, Shaq something, he described it best. He said it is like a balloon that you're trying to keep underwater. As soon as you take the pressure, the pushing pressure down on off that balloon, it just rises to the surface, and that's really what the market's been behaving like. We push lower, but as long as there's no pressure to push lower, instead of going sideways, there's a tendency to buy it back up, and so the market's been in this strong uptrend for years. This is not the longest bull market in years we've had so far. We've had a 10-year bull, I think. I think a while ago, but this we don't know. We have no idea when this is likely to end, and with the administration changing in January, we still have yet to see how the administration is going to respond. But the administration is seen as market and investor friendly, business friendly. So this is what we're pricing in. Okay. As far as what we're expecting for today, I was going to look at the treasuries for a minute. When we look at the bonds, nothing new to report here other than the fact that these things are just dropping and dropping and dropping. They attempt to stabilize and perk up, but all they do is consolidate and continue to drop. So the treasuries are really in this just continuous downtrend, and when it breaks even harder. So it's the market's pricing in additional or a first move on the Fed this December with a pretty high probability, and so it's pricing that in, and therefore the Treasuries, Treasury futures and Treasuries, Treasury prices have to drop for yields to go up, and so that's what we've got. This is the 10-year here, and let's look at it in a clean, same thing. If we look at where we were, you could see that we've had a pretty good pullback. We rushed right through the consolidation zone that we had earlier this year, from the beginning of the year onwards, and we're breaking through that. It's not able to find support yet. So same story. The market is pricing in or is anticipating with high probability that there's likely to be an increase in interest rates. As far as what we're expecting for today, as I said, price inventory is on the buy side. Volume inventory is not. I'm expecting the market to open in an open auction. I'm expecting it to look down into the 2195 area. I'm expecting it to bounce, find buyers, and start pushing higher. I'm anticipating a break of the overnight high over the overnight low. 2200 is a century figure. So I anticipate some resistance, in fact, before it breaks through on the first go. That's the overnight high, and that would be hypo one. Hypo one would be going with the trend. Hypo two, I'm looking for another immediate burst up. It might get tangled with the overnight point of control, might push through that 2200, 2203, and then I'm anticipating it falling back down as it runs out of buyers and finds sellers at these prices, especially with the overnight action being so bullish. Okay, so those are the two main ideas. I can fill the air with all kinds of things, but the fact is, we've been doing the same stuff for weeks now. There's not much with these hypos. You should be able to do them yourself, really. The trader bite shouldn't take more than 5 minutes, to be honest with you. But I'd like to cover the context of everything that's surrounding us so you can make intelligent decisions going into the day. That's how things are shaping up. Good luck, and I will catch you tomorrow morning. Take care.